Hello and welcome to another episode of the Saxo Market Call podcast. As always, my name is Søren Otto and I am your host. And today I am once again, I didn't do this the last couple of weeks, but now I have two guests and I am so happy to have you both here. John J. Hardy, Chief Macro Strategist, and Ole Hansen, Head of Commodity Strategies. Hi guys, how are you doing?
Very well, thank you. And very nice to be in your studio with you, John. That's been a while, actually.
Yeah, it's been a while.
Yeah.
Like old times.
Yeah.
But you have done it quite a bit way before I was a part of this program.
A couple
over here.
1,000 or more episodes under the belt. Yeah, something like that.
Yeah.
Yeah, we are actually, I think we're over 1,500 episodes of Saxo Market Call. Okay, but we aren't going to just have an episode reminiscing on our own behalf, but we are going to talk markets, and there is a lot of stuff going on out there. We're 2 weeks out from the U.S. election, and we also see in your area, Ole, quite a bit of commodity things happening, especially within the metal segment, but sort of on an overall level, because we also have the earnings season right now. What are you guys paying attention to?
Well, I'll go first. And I'll let you take it over, Ole, because your area is a lot more interesting almost than anything else right at the moment with precious metals continuing to hit new highs and that big move in silver. But we're just seeing a big extension of the Trump trade here. The Trump trade being odds supposedly increasing of a Trump, not only a Trump victory, but a Republican sweep. And it is so critical to know that there is a massive difference between whether Trump and the Republicans enjoy both houses of Congress, as we've noted before, or whether, for example, the House just very, very slightly goes back to the Democrats, which really disrupts most of Trump's agenda and becomes a very different scenario. So, but the markets seem convinced that we are seeing a Trump trade. We do see things like the dollar has extended higher. It's a huge move in U.S. rates at the long end, even sort of spilling over into rates elsewhere. If you look at what happened in Europe yesterday with European bond yields, etc. So Mexican peso is very nervous. We see the highest implied volatility in the Mexican peso as dollar Mexican peso trades near the highs of the range. It's been the highest implied volatility in quite a long time, well over 20%. The idea being there, if we get a Trump presidency, we have discourages investment in Mexico to then export back into the U.S. because of tariffs. So all of these trades conspiring. I wonder if it's how fair the assessment is. I think a close election does favor Trump, but it's a pretty aggressive move, and it contrasts a lot with the prior two election cycles. Worth mentioning there that if you really extend it in terms of pricing in what's going to happen as a foregone conclusion, what is in the reaction function? How much more can it extend when you actually do get the news? Both in 2020, if you recall, in 2020 we had very strong odds that Biden was going to win. We saw a lot of caution before the election, quite a decent dip. In 2016, the same. Extremely high odds, something like 9-1 that Clinton was going to win, and yet equities were about 5% discounted from the recent highs before the 2016 election. So just an interesting thing, Ole, I think, the sort of aggressive moves going into the election when we don't know the result yet, and it is quite clear that things are close. But I think it's that's what's going on now. Can it extend? Of course it can extend, but I'd be surprised if it continues just to go in one direction into this election.
And what about, just before you get Ole to talk about commodities, I'm just curious, is there anything such as a Harris trade, or is that just completely wiped off? I mean, she is bound to be good for something in terms of the markets, I would assume, but I guess that's not really something we're seeing. Just I'm guessing some would ask that question.
Yeah, but I think the reason why this is attracting so much attention is whether it's a Harris win or a Trump win from a commodities perspective. I think in general that they're both going to spend a lot of money they don't have. They're going to raise borrowing requirements. But what is different with the Trump trade is that it carries the risk or opportunity for the Republicans that they can get both the Congress and the presidency. Basically, they can get their ideas, they can get their policies through. Harris would probably not be able to do that to the same extent. That's why the overall volatility in the market is probably lower with a Harris win, based on the fact that the Republicans keep control of the Congress. So this is also what we're seeing translating into the commodity space, because all the stuff that John just been mentioning, higher dollar, yield spiking higher, rate cut expectations are being lowered, funding cost of holding non-coupon, non-dividend paying assets going up once again. This is all negative for precious metals. And despite of this, we're seeing a record highs on a daily basis in gold. As John mentioned, we just saw a silver spike higher on Friday. It is now broken out of its recent range. It's trading at a fresh 12-year high. And I think these are all reflections of this Trump trade, that the market is worried that this a Trump presidency with control of the Congress will lead to more debt, more tariffs, potentially leading to lower growth, leading to higher inflation. And this is really so this is becoming a hedge against the Trump trade, I would say, at this point.
Yeah, and the estimates are, I can't remember if we discussed it on the last episode, but on the order of, I've seen one of the bigger banks saying $6 trillion over 10 years, others saying $7 or more trillion under a Trump sweep scenario versus a Democratic sweep scenario. And let's remember, we're not really talking about a Democratic sweep scenario because it just seems so unlikely because as we've mentioned so many times, the Senate picture looks impossible for the Democrats to win. So even if Harris does win, it's almost certain that the Republicans have control of the Senate. But even if she was to get control, it would be something like an additive of $3 trillion versus Trump's 6. Let's call it 3 to 6, so half. And with the gridlock scenario, in either case, you get, of course, you're going to see continued deficits because of the ongoing spending, and especially if we have a recession, et cetera. But you take that off the table. So it really is different, these gridlock scenarios versus the Trump sweep or Republican sweep scenario.
And then also just adding we're looking at gold now up 33%, obviously getting all the attention because it has been on a tear since October last year. But silver is up 44% year to date. It's, as I mentioned, it's broken higher. And I think one of the reasons why it is doing well is simply the fact that if you're buying into gold, you're buying at a record high. You really have to feel strong, confident that there's someone else going to take it to another record high in the coming days. Where silver hit a record high, I think, John, you remember that clearly as well, back in, was it 2011, where we hit $50 briefly before collapsing. And that basically means silver is nowhere near its previous peak. And that's probably also making it a little bit more attractive. Some traders are saying, well, gold looks quite expensive here. Yeah,
and the nominal U.S. economy is 50% larger than it was in 2011, even more than 50% larger. So just the price of it in nominal terms, remember $50 in 2011 is not $50 now. So that would equate to, let's say, $75 now. We're not saying it's going to $75. It's just you always have to adjust these prices relative to, especially in an era of high nominal GDP growth.
Yeah. So I think the worry from a precious metal investor in the short term is if these polls start to swing back towards Kamala Harris, then potentially some of this recent bid could come out of the market simply because the dollar and the yields, short-term interest rates, are not playing ball regarding the continued support for precious metals. So volatility is hotting up, and we could potentially see some big moves in the coming weeks.
Yeah, and just related to that, I assume that if we end up in one of these gridlock scenarios, if we at least play the game that we say that this is a Trump trade and we are positioning towards a Trump sweep, I guess if we get close, as you say, Ole, then generally across the board on financial markets, we could see increased volatility because of the uncertainty that the gridlock scenarios poses.
I would say, sorry to butt in, but I would say the volatility scenario is the Trump sweep scenario. And what my fear would be, not fear, but just what could develop is we have the market getting over its skis on the positive side on the Trump sweep scenario. Positive side meaning, hey, we get these corporate tax cuts, we get the deregulation, we get the growth. But what about all the other stuff? Spike in long-term yields. That spike in long-term yields is traditionally something you have to really worry about as an equity investor and the duration that equities represent. What about those Trump tariffs, the disruption to the trade, the stagflationary risks of excessive tariffs? So I just think there's two sides to this. It's not just gridlock sweep; it's market positioning versus the other implications of the sweep as well. It's a lot more complicated than simply red-green type of scenarios.
And we have to remember back in the second quarter when the World Gold Council released their quarterly report for the second quarter, we are due the third quarter report, which is going to be very interesting. They basically highlighted the high net worth individuals and family offices as a major driver of demand, especially in the Western world, starting to wake up to the fact. And part of the reason many of these mentioned why they were buying gold was the worry about debt levels. And debt is not going to go away almost no matter what. And it is something that we have to deal with in the coming years. And it doesn't seem, and if you ask an American voter, what is your concerns? I think the debt level is way down the list. They don't care. because they don't, and that really makes it, from a politician perspective, it's not really something they want to focus on until the market forces them to, and we're not there yet.
Yeah, and just to note you made earlier, Ole, we've discussed gold and silver a lot this year, and it's been moving, can I say, not necessarily in its classical way. Sometimes it's moved with interest rates and other things. It does sound to me like what we're seeing here might be that it's more it's sort of an old school safe haven move in terms of the debt buildup for Trump. Is that sort of a correct estimate?
I think that's fair. That's a fair point, and just general debt in general, because gold used to historically be a safe haven against inflation protection, against geopolitical risks, wars, and so on. But I think the debt pile that is piling up around the world is becoming an increasing worry that at a worst case scenario that you run into a buyer strike, and then obviously yields could be spiking, and that's really what you want to protect yourself against.
All right. Let's just, before we end here, I think we're going to do a little bit of shorter episode and just jump in if you have anything more. But I just wanted to touch on the earnings season, which is heating up, if not already kicking completely into gear. How do you see that relative to all this? Because we have some important earnings coming up, but what do you have any feeling on whether the markets are paying attention to Trump and the election, or to earnings season, or are they trying to grasp it all?
It's interesting timing with an earnings season going into an election, because you're well into it but not through it when the election comes along, and we're always looking for narratives to pull out of an earnings season. So of course we should pay attention to earnings. We should pay attention to the consumer. We should pay attention to the whole Mag 7 space. We should pay attention to especially the AI space, which is extraordinarily important given how big the likes of an NVIDIA has gotten, hitting this $3.5 trillion in market cap. The only other stock to ever do that was Apple, and in fact closed yesterday at a record high. NVIDIA's earnings, I actually can't remember when they are because they're not right on my radar. They're not here in the very, very near term. But Tesla's are, and those are tomorrow. So that's another one of those market sentiment tests, although Tesla's become a little bit of a sideshow and a curiosity thing of its own.
And even more interesting with the Musk-Trump connection.
It's its own thing, but of course it's very important. It's been a favorite speculative stock. I would say a couple things. You see a lot of focus on this what they call it, cybercab, and its prospects. Yes, that whole autonomous driving, full self-driving aspect of Tesla is extremely important for the long term, because that's what the company's, that's the only thing that would sort of value or justify the company's valuation.
And also, if just to steal the words out of Peter's mouth, it's the only way that you can look at Tesla as a tech company and not just a regular car company.
Exactly. A really key point. But at the same time, it's not just a car company; it's also a battery company, and they've shown some incredible growth in their battery storage business. Actually growing. I don't have the figures here, but it actually becoming a more significant part of its business. Mm-hmm. And so, if you have a business within a business growing at these interesting and exponential rates, Tesla Megapacks, et cetera, that help you sort of store some of that. For example, solar demand, solar build out is absolutely massive. So you if you're producing excess power during the heart of the day, you store some of it, and then the peak evening periods you bring down the peak load. Instead of firing up natural gas plants, you just feed it from batteries. So I think that's an interesting part of its business. And then we've kind of forgotten about the whole Tesla Semi. I also find that interesting as well for the longer term for that company. It's something that supposedly goes into production next year. So very curious, but also, as you pointed out, I mean, Elon Musk has waded into the political situation here with an unbelievable force and these crazy things about getting voters in Pennsylvania to sign a petition to support the First and Second Amendment, and then handing out $1 million to a random person that signs the petition. People are wondering if this is even ethical. All of his chips are on red for this election. That's for sure. I think part of that effort is his own beliefs, but it's also in part hoping to have influence over maybe the regulatory framework in the event of a Trump win, helping lay the groundwork for having these autonomous vehicles even operating more quickly than they would be otherwise with more heavy regulatory approach. So big stakes for Tesla in this election, for Elon Musk personally, I must say, but it'll be an interesting earnings report, that one.
Definitely. I don't have much more. Do you have anything you want to add before we end? I think we came pretty well around the U.S. election, commodities, obviously gold and silver.
No, I think the thing to watch politically is the polls have just sort of just inched closer and closer and closer and closer. It seems like almost every day in and day out since around late August. So is there some, I don't know, a Joe Rogan podcast appearance by one of the other candidates that accelerates that tightening, or maybe starts to see some slice of voters questioning Trump? Although if you don't know who Trump is by now, I just wonder where have you put rock have you been living under for some time now. So it's a nail biter of the last 2 weeks running into
maybe
this.
We'll see Kamala Harris flipping burgers somewhere.
Maybe so after Trump's McDonald's appearance. Good point.
Okay, thank you so much for being here, guys, and for all your input. Always a pleasure. Always much smarter than what I have to come up with. But thank you all so much for listening to the Saxo Market Call. We will be back next week. And until then, stay safe out there and happy investing.